Welcome back to Ignite&Scale. Today's guest is Sam Baker, Managing Partner at Mobility VC, a global venture platform investing in the infrastructure behind the future of mobility. What's interesting here isn't just the sector, it's the model. Sam started his journey in impact-driven work with Kiva, went on to co-fund and scale Wonder Mobility into a global platform operating in over 100 cities, and is now building Mobility VC. This is a platform that sits at the intersection of capital, corporates, and real-world deployment. So this is somebody who has built in mobility, scaled in mobility, and now allocates capital across it. Sam, great to have you on Ignite&Scale.
Nice to be here. Appreciate the invitation, Mike.
No problem, no problem. I mean, really, if we just start with your background, I mean, you started at Kiva, you built Wonder Mobility, and now you run Mobility VC. What's the common thread across that industry, and how did you get into mobility?
I think if you look at myself and in terms of my personal background and that of our team members at Mobility VC, you'll see a very international kind of multicultural team that have grown up all over the world in different contexts of cultures, speaking different languages. And I think that's sort of one of the strengths that we have as an organization and what makes us unique and what kind of has brought us together as a team. My own work experience, having worked in Latin America, the United States, and Europe, was always sort of a curiosity about how things are done in different contexts, kind of exploring the road less traveled, I guess, as some would say. And I think that informs how we approach problems and the kind of solutions that we can come up with.
And I guess just as a follow-up to that, you know, how does that progress shape how you invest today? Are you more financial-led, operator-led? Has that progressed over time?
Putting in the effort. And at the same time, though, I think we're eyes wide open in that when you're working with ventures of all stages, really, but especially earlier stage ventures in particular, we know that it's a winding path sometimes to get to where you're going, and you need to have a certain realism in how you approach analyzing how long things are going to take, right, and the level of effort that's going to go into it. And I think frankly, the resiliency of the team is really key in that, right? Like, how have they demonstrated in the past that they've gone through adverse circumstances and been able to maintain the motivation and the resolve, sometimes creativity, to be able to get through challenging situations that we all face, right?
Yeah. No, that makes perfect sense. And perhaps if we focus in on Mobility VC, I mean, it's not what I'd call a traditional fund, but how would you define it?
Yeah, I mean, so within our team, very entrepreneurial individuals that have run their own companies and organizations previously. And so we don't just approach an investment opportunity with a portfolio mindset and looking at the facts and figures on the spreadsheet, which is admittedly an important part of the analysis, but we also look at how can we play an active hand in helping this business grow and bringing our own experiences and network to bear. And where we really shine is if there's a particular mission, for lack of a better word, that we feel like we can have a strong impact in, but will conversely also have a very strong impact on the company. Let's say bringing in an additional strategic investor from our network that they might not have had a relationship with, but that could unlock new opportunities, or approaching new markets in terms of geographies or different products because of the network or relationships that we have. If we get the sense early on through some of our testing that we do that we're going to have a strong impact, that will make us even more excited about going on that sometimes difficult journey together.
Yeah. I mean, you've got a phenomenal network. I've seen it in practice, and you've introduced me to some fantastic businesses looking to get into the UK, and you've got a good network, really, from what I've seen in lots of different continents. But what was the actual problem you were trying to solve? Was it actually taking the best of what's in one continent and taking it into another continent through your network, through the mobility lens? Is that what you're actually stand for, what you're trying to solve that not a lot of people can do?
Yeah, I would say, I could broadly say that we're investing mostly in business to business solutions within mobility. We are touching on occasion on the consumer side, but really our expertise within the team and let's say area of comfort is primarily in sort of solutions that are behind the scenes that are part of the, I don't want to say infrastructure because you might get the wrong word with that we're talking about roads and bridges, but really the underpinnings of what makes a solution viable. And at times, one of the challenges that companies face that are working on that back end stuff is that in the long term, if you want to build a big business, it's difficult to stay in the small, geography that you're in, right? So you mentioned the UK before. I mean, one of the challenges of an entrepreneur starting, let's say, a business to business infrastructure business in mobility would be at some point you're going to have the strong motivation to get outside of the UK and unlock other markets in Europe and then eventually North America. And then the story very well after that. So for businesses that are in the right stage of growth, inevitably they are going to be looking at international markets if you're in a niche, for lack of a better word. And that's where we feel like we can really shine because of our our partners experience, frankly, being very multinational for such a relatively small kind of boutique firm, right?
Yeah, no, absolutely. So in terms of your real edge, do you force probably the wrong word, but do you enable companies to become more international, or do they have to have that aspiration for you to show your real edge? And is internationalization your real edge? Is that fair to say?
I would say that internationalization in terms of physically launching new countries can be one aspect of that, but an even lower hanging fruit, so to speak, is having a more diverse set of investors and partners around the table as an entrepreneur. I'll give you an example without naming names. There's an investment that we're working on right now in a company that creates technology for cities. Yeah. And they are in discussions with another investor in a completely different region of the world that has experience selling services to cities for many years. Yeah. And even though that other potential investor and partner is a quote unquote traditional business, they have an incredible amount of institutional knowledge about what the dynamic is, building relationships with cities and municipalities and going through RFP and RFQ processes, and really providing a service that is ultimately then sold as a public good, which is a completely different dynamic, right? Because the city, without going into too much detail, I mean, oftentimes the cities don't really care if it's profitable, what they're providing. They care that it's providing a level of service for the greater good of the public. And so it's a very different type of sales dynamic. And so anyway, in that particular discussion, it's not really about, okay, let's launch tomorrow in a new region. It's, hey, you've been in the market for 100 years providing services to cities. We've been in the market for less than 10. What can we learn from you? And so I think that's really the more important shorter term impact.
Yeah. No, understood, and very powerful. I mean, in terms of your investment strategy, how do you think about deploying capital across the mobility stack today? I mean, obviously there's a lot of different market forces, etc. And what's in your kind of sweet spot, and where wouldn't you invest as well? Because obviously mobility is a huge space, really.
Yeah, I would say for better or for worse, reasonable people could debate this. We're definitely taking a more bottoms up approach than top down. So we are not doing research and figuring out what the macro trends are and then placing considered bets on, okay, well, we have to put a bet in autonomous vehicle software and we got to make it before the end of the year because the wave that's really not our style and the way that we feel like we can play out our strengths. I think when I say bottoms up, we're looking at an individual investment opportunity, a team, the market that they're in, the track record that they have in that market, and then what types of relationships we can bring in from our existing investors or extended network that can help them have an advantage to playing out their mission. And if we feel like the maths align, then it's worth spending time on and investing resources. And if the maths don't align, typically we take the approach of saying, let's stay in touch. We try to be helpful, even if we're not invested. Come to our events that we put on. We'll try to help you with the broader network, even if it's not formal.
Yeah, no, understood. I mean, some areas of mobility are still kind of quite capital intensive. How do you think about returns, and how would you underwrite some returns as well? And I guess as a follow-up to that, what do you think separates a good business from a business that might return the fund for you as well?
I think that we are evolving our understanding of what our priorities are as a team and within our broader investor community. If you had asked me 3 years ago, I would have a very clear answer. Greater than 3x returns, like average of that exceeds 30% IRR. Like it would be a very sort of standard kind of fund approach. But as an organization, we've been getting more involved in investing in later stage investments with single fund strategy, so-called SPV strategy. So investing in individual companies at a time has become more and more part of our daily business, and we are trying to match the priorities and needs of the investors with the needs of the particular startup, both commercially and then also from an investment return perspective. And sometimes we're looking at businesses now that are already generating profits and even paying out dividends to investors. And it's more of a question of, okay, like what's the right price to pay for this company relative to the mid to long term opportunity, and then what types of strategic value can we bring in by, say, like layering in a new partnership or adding a new technology into the mix that might affect the underlying economics. And that's a totally different type of game than the kind of classic like early stage VC in terms of how we started. And I think we're gravitating more into that space and looking at each deal as its own story and seeing if it lines up for all the stakeholders.
Yeah, no, I mean, that's fascinating because I guess my follow-up to that was, do you think capital discipline has finally arrived? Because it wasn't there probably 21, 22, but I guess you've adapted your model to demanding greater capital discipline, which is a trend we see in the market as well.
Yeah, I've had some pretty difficult discussions with founders that raised in 2021 that are realizing that the price that was paid for their shares is not market at this point. So I'm fully aware of that. Look, I think there's probably always going to be waves of super hot trends in the quote unquote tech scene, right? And there will be companies that will receive extraordinary value for the shares that they're selling. But I think where we feel more comfortable as an organization and where our partners and investors feel more comfortable is focusing on what I would term the less sexy parts of the market. Like in terms of like where we spend more time is actually less on the upside maximization and more on the downside minimization. I think it's not a one is good, one is bad. It's just a stylistic approach and kind of what your priorities are and what the priorities of your partners and investors are, and the priorities, frankly, of also the management teams that we're working with too. We'd rather have a steady a progress rather than kind of a moonshot approach. And I know that's kind of weird because our name is Mobility VC, so that maybe not the most apt name anymore for we're heading, but I think it's helpful to talk about as an organization that you can evolve over time and as the markets evolve, but also as we evolve as individuals, right? And the people that we work with, right?
No, to be honest, that makes perfect sense to me. But it's hard to, as you say, it's hard to kind of transact, and I guess getting people aligned onto that model that is so different, and where the perception has been so different, can't be easy. But it sounds like you've done that, which is great, and you've got everybody aligned. I mean, I guess I've seen you work closely with corporates, obviously, and also OEMs in certain parts of the world. That's not easy all the time, particularly in different markets, and maybe doing that in multiple different markets. How do you make that work and get everybody aligned? Because I don't think that's easy.
Completely agree. I think it's not an easy path always, and it certainly often takes longer than we all hope for to find real commonality and kind of practical collaborations that are possible. I think this is where, if you approach it with the right level of expectation and the right expectation on time frame, it can be very rewarding. And I would say that there's a lot of, like, if you were to approach a kind of a corporate relationship as a startup and insist on, this is the way that we want to work with you, and take it or leave it, then that's probably not gonna work.
Definitely not.
But more of a curiosity of, okay, what are the touch points that could be relevant in a relationship where you have something that is hugely impactful for me as a company, and we can define kind of what the path of least resistance is for the corporate to be able to invest. Because one of the things that I think founders often misunderstand is that when you say, we are talking to BMW, it's like, well, who exactly within BMW, right? And which teams and which individuals within those teams. And it's just, it's a living organism with thousands of people. There's not one voice, and that's part of the challenge, but also the opportunity is there's lots of angles into a relationship. A concrete example would be, and this is where I think kind of our model is being not quite black and white venture capital is very useful, is, we're speaking right now with an emerging EV OEM, and the EV OEM is not, their biggest problem is not that they don't have capital per se. They have some pretty good solid investors. They don't have unlimited capital, but it's not capital. It's that in the world of tier ones, meaning the automotive suppliers that are primarily selling into BMW and Hyundai and Toyota, they're used to doing massive multi-year contracts. So they'll say, yeah, you want an airbag? Sure. Why don't you pay us $10 million and then we'll get our engineers working on figuring out how to adapt our airbag. Like, that doesn't, that's not going to, for an earlier stage company, that doesn't fly, because you've got 1,000 components in your vehicle. You can't do that for every component, right? Yeah. So what they're seeking is our relationship with a tier one, where the tier one comes and says, I believe in the category that you're building. I would like to invest in kind the engineering that I would have charged you in engineering services into an equity stake in your business. And then I'll provide you a reasonably competitive rate, but it doesn't have to be crazy, for the parts to supply over a longer period of time. And that's where a partner like us can get involved, because we could structure a vehicle. By vehicle, I mean an investment vehicle.
Yeah, of course.
That can accommodate that type of blend of cash investing and then also in-kind contributions that then can in turn go and invest and hold a stake in that business. So this is all to illustrate that if you come in with a black and white, like, you have to invest in this venture fund and see returns in 10 years and this is exactly how it's going to work, that's a perfectly valid approach that many firms are doing very successfully. But you're not going to be able to do as easily the second example that I just mentioned, because that's a lot more creative structure, but it's more bespoke to the circumstance.
Yeah. No, that makes sense. And Sam, if a founder is listening to this, what's likely to get your attention at this moment in time? Is there a particular theme, a particular market? Is it behavior? Is it chemistry with the founder? What kind of, you must see literally hundreds of founders every year. What stands the good ones out in your eyes from the ones that you don't think are suitable?
So this is a personal opinion and a style. It's not a statement about what's good or bad or the right way to do it, the wrong way by any stretch. For us in our team, we're really interested in having long-term relationships where we are working closely together with the teams that we invest our capital and time with. And so oftentimes the most successful relationships that we have start with a very long kind of very informal get to know you period. We might be introduced by a common investor, or an LP makes an introduction. They come to one of our events. We have a nice chat. There's nothing particularly that we can do at the moment because they might not have an open funding round or particular strategic need. And then we stay in touch and they send us updates or share things that they think that we would find interesting, or ask us for a quick call for some advice. And, it's kind of a relationship that builds over time. And then at some point you're kind of like, feel sort of a closeness to the company and an interest in sort of their success. And then some very concrete need comes up. Oh, we have an open funding round, or, hey, we have this acquisition offer. This is just had it happen this past week. All of a sudden, there was out of the blue, there was an acquisition offer, and the founder wanted to meet and have lunch and talk through some personal ramifications of what that would mean. Yes. And so for us, like, that's very motivating to be building those long-term connections, and it's part of what makes the job fun, is having these true kind of relationships with the founders, with the teams, and sort of building those over time. So the most successful examples that we have of commercial collaboration it really starts with those connections.
I mean, Sam, I think you've built a world-class mobility platform in what you've got today, and you've got a fabulous team as well. But you're a young guy. What's mobility VC going to look like in 5 or 10 years' time?
Ooh, that's the major question, right? I'm not sure if I would be able to very clearly articulate that right now. Maybe that's not the best answer for the managing partner, to not have up my sleeve what things will look like in 10 years. I do fundamentally believe that, the traditional venture capital model, particularly if you're focusing on a sub-segment or a sub-industry, may not look the way that it looks today in 10 years' time. I mean, just think about all the tools that we have available. We can work remotely all over the world. We can model a lot of traditional administrative, legal, and structural functions using technology these days to run investment funds. We don't need to spend, tons of money paying lawyers to structure things and reviewing every single contract. We have standardized formats. We have technology platform. I mean, you can run a fairly impactful firm making investments with much, much less overhead these days, right? And I think that will have an impact on, whether it's like what will happen to, say, like the very large firms in the space, right? Like, is it necessary to have all of that massive infrastructure to have a meaningful impact on the industry? And I think that, in our case, like, we're trying to learn kind of where we fit into kind of all of this, and trying to do it in our own unique way. And when I say own unique way, part of it is where we get business value and leverage, but part of it is also, and maybe this is not the most, MBA thought through kind of response, but honestly, a lot of it is a personal thing too. How do we want to spend our time as entrepreneurs? Who do we want to be working with? What are the topics and the people that are interesting? And I think that that's often sort of undervalued, right? Like, sometimes it's not just about the grand strategy. It's about, look, I just like getting up in the morning and working with these people and these companies that we have. And that's honestly like a huge criteria. It's like more as much as the financial motivation, it should also be like, is it fun, enjoyable, and motivating?
I mean, that makes perfect sense to me, Sam. And obviously, and I think that approach that you've got has allowed you to adapt so much in the last few years as well, because you've stuck to those principles, and obviously you've got a huge network, but you've applied those principles in a changing market and adapted that to deals that suits all stakeholders. So you're clearly, I think, very adaptable for the future, whatever the future throws at us, really.
I hope so.
Yeah, that's great. Well, look, Sam, I really appreciate the time that you've taken to come onto the podcast. And for me, I guess the takeaway for me is simple, really. I guess in mobility, capital alone isn't enough. The edge that you've demonstrated as well comes from access, execution, but also solving problems every day as well. And that builds into value. Is that something that you concur with?
We need your help in our marketing. That was an excellent summary. Just an anecdote would be, if we would be very proud if a founder or a team of a company that we work with said that we're one of the first people that they call when something comes up that they want to talk through a problem, or they're excited about something that happened, and they feel like that, we're on the speed dial, right? Yeah. That would make us feel really good about kind of the work that we do.
Yeah. No, that's great. Well, thanks very much for joining us. And if any founder wants to get in touch, what's the best way, and what's the best stage that you'd like them to get in touch as well?
If you I wouldn't restrict it to any stage. If you want to learn more about or share something that you're working on, you can email info@mobilityvc. You can also check out more information on our website, www.mobility.vc. There's also information about our upcoming events. We host a format called Mobility Cafe, which the next one is coming up in London in June. Yeah. So you'll find more information on our site about applying to join there. 100 founders and 100 funders, all from Mobility, taking over a cafe for the day. No panels, no speeches, just networking. So we would love to hear from you if you're interested in participating.
That's great. Thanks again.
Thanks, Mike.
If you want to listen to more episodes of the podcast, we're on all good audio platforms. Our website is also www.cambriaprivatecapital.com. And you can also find myself on LinkedIn and Twitter, where we publish our weekly blogs as well. Please do get in touch if you want more information.